personally, I feel that in the next 24 to 36 months, you'll see 2 to 3 of the largest single increases in the history of gold and silver based on United States dollars for gold and silver.
Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and we're going to get an update on gold today. It's quite the day to be discussing it. It is moving as we are seeing geopolitical tensions rise. And to discuss this with me, I have Russell Calkins on the line with me. He's served as a commodity trading advisor for a number of years, and he's now a gold broker with 40 years of experience in the markets. He's with Southwest Coins, LLC. His website's swcgold.com. Russell, thanks for coming on the line with me today.
Oh, hey, no problem, Kenneth. Thank you so much for having me.
Well, sir, we have a situation now where stocks are dropping as geopolitical tensions mount. The VIX jumped 12% today. Gold, I read a headline today and I saw the number. You know, we're looking at it at 1275, hitting above a key technical level, highest since the election. And we're seeing a lot of reactions now with what's going on in Syria, North Korea, Russia. Let's get your thoughts on where gold is today.
All right. Well, let's cover over quickly the news that you are talking about. Today, we are seeing in Europe trade on Tuesday rising political tensions over North Korea and Syria supported demand for the safe haven metal. So pretty much this is what we're seeing on the fundamental side of the market. On the COMEX division of the New York Mercantile Exchange, which is the largest gold market in the world currently, for June delivery gained 0.39 of 1% to 1258.85, and we know it's currently higher than that now. U.S. Secretary of State Rex Tillerson is currently at the G7 Foreign Affairs Minister meeting in Italy, where political leaders are working to produce a message with Syria and on Syria. The U.S. has been working to rally international support for its revised stance on Syria ahead of the American Secretary of State's first diplomatic trip to Moscow. However, the Kremlin announced Monday that Tillerson and Russia President Vladimir Putin will not meet in what could be a sign of increased tensions. Market also focused briefly on the eyes of Asia and North Korea, warned Tuesday of a catastrophic consequences, quote unquote, in response to any further provocation by the United States days after the U.S. Navy battle was sent to water off the Korean Peninsula. Stateside remarks Monday from the Federal Reserve Chair Janet Yellen provided little effect on precious metals as she repeated her outlook that the central banks would raise interest rates gradually and with an aim sustaining full employment and near 2% inflation without letting the economy overheat. Whereas before we had our foot pressed down on the gas pedal trying to give the economy all the oomph we possibly could, now allowing the economy to kind of coast and remain on an even keel. To give it some gas, but not so much. We are pressing down hard on the accelerator. That's a better stance of monetary policy, she said. The last thing is, she said, we want to be ahead of the curve, not behind it, Yellen explained. Now, moving on, in this market, I've been charting the market since I was a kid. And again, I was a commodities trading advisor, Series 3 commodities broker with the National Futures Association, hiring commodities brokers. So my specialty was commodity futures options. So I traded all 65 of them. And so what we are seeing right now, and of course, nobody knows what's going to happen tomorrow, but I can tell you what the facts are, that's for sure. And as a technician and a fundamentalist, all my life, I can tell you that this market in 1979, interest rates went to 21.5% in the first week of January of 1980. We had President Carter, we were at double-digit inflation, and Russia had just invaded Afghanistan. We had the Iranian hostage situation, a double whammy all at the same time. However, note that interest rates went to 21.5%, and gold and silver hit $52.80 an ounce. So if Yellen, based upon a heated economy, which this is what you're seeing, in my view, based on mathematics, the next 2 to 4 years, America will be worth more than 3 times the rest of the world combined because of innovation in technology, robotics, medicine, innovation in applications through the internet and so forth. This is going to take a lot of money from the central banks. People are already borrowing, excuse my language, like a crazed weasel. And so the only way the Federal Reserve can keep up with that is to raise the price of money. However, if in this type of market, if you continue to borrow money to expand your business and to hire more people because you have a businessman, a successful one at that, with a business plan attitude running the country, oh my goodness. So, but be careful after that period of time, because if you go to the usdebtclock.org, you can clearly see that the deficit currently 19.8 trillion. The whole world will hear about it when it hits 20. You'll probably see an S&P credit devaluation on America at 20 because it's too exposed, which is what happened last time in quantitative easing. So,
Russell, let's
yes, sir.
Let's just get your so we see what happened here with gold, and we've been talking about a lot of breaking points. I mean, obviously you're talking about the debt. We have geopolitical breaking points, economic breaking points, just the monetary expansion breaking points. Is this just one potential catalyst here, with the U.S. involvement in the Middle East and just an eruption that could send gold higher? And how big of an impact do you suspect it could have on gold? I mean, could we see new 52-week highs here going forward in a very short order?
Personally, I feel that in the next 24 to 36 months, you'll see 2 to 3 of the largest single increases in the history of gold and silver based on United States dollars for gold and silver. It always has had to do with Russia. When Russia invaded Afghanistan in November of 1979, we immediately sent 280 United States ships to the Persian Gulf. Russia immediately sent 320 of their warships to the Persian Gulf. All right, they met. It took 2 weeks to get there. That's why silver hit $52.80. Of course, there was liquidation order only by the COMEX market set into place, making it you cannot buy any more futures contracts, but that's another story. But nevertheless, silver could have easily went to 100, 200, 500 an ounce, but they put liquidation order only on there. It's wild what happened after that, but I see that Russia is directly tantalizing the minds of large hedge funds, which I know some of these guys, some of them are my friends, and I can tell you that they're looking very hard about taking a small amount of hedge funds money like they did a few weeks ago and go into the gold and silver because of this incident with Russia right now. And if it happens, you'll probably see, you're looking at on the monthly chart, on the Bollinger Band, you got 1386 on the resistance, and you've got 1047 on the support. Now that's on the monthly, and your average is right around gold's production price, which is about $1,200 an ounce at $12.13. But if you do take out this 1386, technically speaking, actually 1421 will be the next test. But then it flies all the way after 1421 to 1798. So yeah, we're looking at a very explosive market right now, technically speaking.
Russell, I got to bring up the Fed and their talks about unwinding a $4.5 trillion balance sheet. What sort of implication does this have, in your opinion?
Japan actually is one of the leaders in buying their own debt back. America has always been, prior to November of 2010, we never just printed money. And then you have to print the bonds first, then you have to print the money, And that's how it worked. So when they borrowed $780 billion from the Chinese on the stimulus program, we sent them the United States Treasury bonds, and we did print up the $780 billion in $1,000 bills. So directly speaking on this, I would say that the increased demand for money is going to be to the point, not shifting the subject, that it's going to take all eyes away from just about everything else. In my view, you're going to see the dollar go straight through the roof. That's not good for gold. However, gold's not going to be able, in my view, fundamentally speaking, to hold back. We're going to need the gold for the industry. We're going to need the gold for defense, medicines. We're going to need the silver for sure in the fields that we need the silver in, the smartphones and all the defense and so forth. So I think, all the way around, fundamentally and technically speaking, the number one tip I have for everybody out there is acquire as much gold and silver as you can as fast as you can.
I want to ask you one last... Oh, go ahead.
Sure. But moving back to your question more specifically, I think you're referring more or less to this, Bitcoin type electronic transfer of money, getting rid of the currency and taking a 15% haircut is basically the consensus out there, which in order to do that, they would have to confiscate gold and silver, which if you look at Title 1295A, you'll see that that's the law that gives the president the authority to confiscate gold, in which they've done that 3 times in American history. And it strictly states only during times of war, the president can, under any institution he chooses, take the gold. And so what I'm saying is there's very few items that are left in the 3 times that they confiscated gold that they've never been able to take, and that's United States currency made out of gold and silver. But getting specifically back into, I believe, the question that you had, and only spending 60 more seconds on this, if they do this electronic haircut, in other words, 95% of all transactions right now are done with some sort of an electronic transaction, whether it be debit card or whatever. And so to get rid of the rest of that, it's not going to be that big of a deal. Just use your debit card from now on. In fact, you can even keep your same bank. But remember what the Federal Reserve said in November of 1979. This didn't say like Yellen, if this happens, that happens, we might consider raising interest rates. When they said 2 things are going to happen after the turn of the century in November of 1979, the Federal Reserve said that they're going to be rainbow money after the turn of the century. Sure enough, it happened. And a gold and silver coin half the size of the dime representing $10. It'll be like a Bitcoin that you never see. But there still will be gold and silver that you can own. So maybe sometime we can have a conversation on that also.
Right. Yeah, I mean, when Richard Nixon tried to take the gold out of money, it never really took the money out of gold. And everyone even were concerned. People were concerned that gold was actually going to collapse, and we saw what happened following 1971, of course, throughout the 70s and into the 80s, and even to where it is now. Russell, you brought up Bitcoin here, and so I assume you have some opinions on it. I'm not looking for any sort of technical answers, but Bitcoin's back over $1,200. What sort of implication do you see Bitcoin having on the monetary system, as it's still being very new and it's really revolutionary?
I think it is I think it's the start of the future of the electronic money that is about to happen, in my view. Nobody knows what's going to happen tomorrow, but the consensus is out there that Bitcoin has basically revolutionized and gone through the headaches on the scrutiny of looking at them from the Treasury Department on down. And it has passed the course and is still passing the course. And so the bottom line is that's the same thing that they're going to do based upon what the Federal Reserve said, and based upon the consensus that we're seeing right now, is that I think this is a huge implication. And I do believe that the people that are on board, since I believe there's only a certain amount of Bitcoins that are available, that I think that based on the fundamental and technical side of Bitcoin, I see nothing but it continuing to go up, because the devaluation of the United States dollar, mathematically speaking, from 1964, when a silver dollar was a dollar or a paper dollar, it didn't matter which one you used, both would acquire about 5 loaves of bread. Today, a paper dollar does not acquire 5 loaves of bread, and the 1 ounce of silver still acquires 5 loaves of bread. So the bottom line is, since there's only a certain amount of Bitcoins, and the market does feed off supply and demand, and the consensus is heavily leaning toward electronic form of money, I would say that the Bitcoin is a wise move for the investor to put in their portfolio.
Russell Calkins, thanks so much for coming on the line with me. Any final words of advice you'd like to give everyone? And of course, let everyone know about your service and how they can reach out to you if they choose to want to purchase some metals.
Okay, thank you so much. And I really appreciate, Kenneth, the man of your status, allowing me to be on your show. I'm very humbled by it. I've been in this forever, and I can tell you that most every conservative economist in the world all agree that you must have 5 to 25% of your assets in precious metals as a preservation of capital and a hedge against inflation. This is from day one. Think about how far behind you really are on what you need to own, according to nearly every conservative economist in the world says you must have this in case something happens. You can always convert it into cash if you want, historically speaking, but if you don't have it and something happens of any of these things that we have mentioned on the show, it could be some serious consequences, like 1923 Germany. You can contact us at 520-335-0007. And of course, he mentioned a website at swcgold.com. And God bless you, and I hope you have a wonderful day. Kenneth, thanks for inviting me on.
Hey, Russell, thanks for your thoughts and great update on gold today. Appreciate your time.
Thank you, sir. Yes, sir.